Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, it's Monday, and the snow has melted here in Dallas. Very excited about that. Well, the market is it's in a funk. I definitely think that long term, of course, we're going to see we're going to see a lot more stuff from some of the techs. I've been buying Google, which is going to be splitting 20 for 1. If you are a member, if you are a owner of record on July 1st, and it's going to split 20 for 1, so you get 20 shares for every one that you have. Well, actually 19, and then total of 20 on the 15th of July. But you got to own them before July 1st. So I've been trying to I have to move into them, and I've been moving in, but it's kind of been moving out. The tide's been moving out. Well, there is one area of the stock market that's doing well, and believe it or not, it's not too surprising, but this sector has been up tremendously since the first of the year. And it's kind of obvious what it was. I mean, we're in a confirmed uptrend, which is good, but the rest of the market just hasn't been, it hasn't really been doing much. I mean, we are in a confirmed uptrend, so we should be trying to get back in the market. I've just been trying to buying things, trying to buy things. Tough to buy things right now, because really, we don't have, it's just a tough position. It's a tough market to be buying right now. So, well, what do you do? Well, what I'm doing anyways, and who knows if this is right, is I am looking at the oils once again. That seems to be the go-to. Seemed to be the go-to area in this market, and I'd like to say it's different at this time, but I don't think it is. The inflation fears are real, and it's just looking like this is the area to be in right now. And I've only got three stocks in this area. I basically only have I'm pretty light all the way around. But I basically have these three areas. So let's see if I can get to the right slide. Here we go. Okay. So basically, this is the small portfolio allocation. I've got Williams Company, that's a gas pipeline. I've got Cheniere, that's LNG, and also in the natural gas area, but it's liquefied natural gas. Then I have the Google A shares, which is GOGL. There's two symbols for Google. There's GOG, GOOG, which is Google C shares, and GOOGL, which is the A shares. They trade almost identically, but it seems as if the A shares are the ones that seem to have the most traction. So I have basically little bit over one full position in that. And then Matador, which is a oil company. So basically, I've got the rest in cash. So basically, really what I've got is a bunch of oils and Google. Now, I hope I'm right on this, because it would seem that would be the case, but not been the case. So let's kind of look at this area. This is an interesting area. We've got some very strong stocks in this area. Now, unfortunately, none of them, with the exception of Matador, is unfortunately in a buy zone. Pioneer PXD, excuse me, that's relative strength of 98. That means it's in the top 2% of all stocks out there. Earnings per share are very strong too. Also, this one, CIVI, seems to be doing very well. Don't know much about it. EOG Resources, Denbury, and Matador. So really, it's kind of a situation. These are the E&Ps. It really seems to be, outside of that and some financials, it's not a lot out there really to buy. There's just not a lot of really good setups right now. This is the stock of the day. This is the IBD stock of the day. This is in the financial area. It's SoFi. I don't own this one, but it is also very strong. It's a very, very difficult market to buy. Now, here's what I've got. I only have 4 stocks right now. WMB, of course, that's Williams. That's up today. Google, GOOGL, that's the A shares. That's down. Boy, look at that. Down almost 2.8%. I have my stop loss at the 200-day line. I'll talk about that in just a second. Matador Resources, this one's down a little bit, but this has been doing fairly well for me. And Cheniere, this seems to be doing very well. This is a LNG. It seems to be making a run. So I kind of want to bring up this chart, LNG, as a potential to possibly add to this position. This is a company that that basically liquefies natural gas, and they've got sites in Corpus Christi, Texas, and also Sabine Pass, Louisiana. Which what they do is they take the natural gas and then they turn it into liquefied natural gas when they put it on the ships, and hopefully sell it in ports all over the world. But this one, as you can see, I've been kind of tracking this one for a while. This one is, currently the price in this 116.50 in after hours, basically flat, but it's moved past this 113.40 buy point, so that seems to be looking good. Its earnings in 17 days on this. So the question is it going to go higher? Boy, who knows? But the interesting thing about this is that it operates these terminals, and it has a very the price of natural gas is going up, and worldwide. Now it doesn't have a perfect checklist. The checklist is 78, which is quite good, but not as good as 100%, of course, that we have in some of the other ones. But looking fairly good here. I want to take a look at the pattern rack on this one. We're basically about we're about 3% above the pivot in 18 days. We're actually we actually could be bought at this level. We do seem to be moving very nicely up the 10-day moving average, so that seems to be pretty good. I tried to get in before and I was stopped out. Sometimes this is tough in a volatile market. I currently have moved my stop loss down somewhat, and currently I have my stop loss at the 50-day line. As you can see here, that's this red line here. That's where I have my stop loss at 106.90 on this one. But I did come into this one. We're up about $10 a share on this one. So just really kind of tepid, but definitely something to look at. Also, another one of my stocks, Matador, MTDR, it's also in the oil and gas area. Now, this is a driller, and this one did move up and then pulled back a little bit. As you can see on this one, kind of want to look at some of the technicals on this one. We are below the 10-day line. We're about 1.5% below the 10-day line, but we're above the 250 and 21. So that is looking fairly decent. This one has a little bit stronger checklist than LNG. It's 89. The only thing this is failing on is some of the funds aren't accumulating this one. I don't understand why, because this one has a very good, it's looking very good. Now it is below the pivot. It's 6% below the pivot. So hopefully we're going to come up the 6%, move past that pivot at 47.49, and then move higher. But this is in a good area, and it's making nice progress. Again, in this tremendous, it's funny. All the other areas like tech, they just aren't seeming to get as much of the love as this oil and gas area. And I think part of the reason is, if we look at the fundamentals, we can see that the last 2 quarters have been very good to Matador. Sales were up 468% in the June 2021 quarter ending. September 21st, September quarter, it was up 132%. So both and the positives here, the profits have up 1,000% both times. So it is really surging. Nice cash flow. The thing is about these stocks, they're very cyclical. $3.68 is the cash flow on a $44 stock. That's pretty amazing when you consider a PE ratio of 14. Now, normally we don't look a lot at these PE ratios, but in this crazy market, this is what's being valued because the value seems to be in that area. Let's look at one that's not doing quite as well, and that's my buy on Google, GOOGL. Now, hopefully, I'm right on this one. I hope I didn't, completely screw up here on my buys. But I started to buy this as it pulled above that 200-day line. Now, I don't like, as you know, I don't like to buy below that 200-day line. I bought basically at 28.6850. We're down. We're down again. So I don't know. That might have been a stupid move. I do have a stop loss right at the 200-day line. So hopefully we can hold above that 21-day line and move higher. We have a 100% checklist on this one. And that's one of the things I wanted to point out. We have a 100% checklist on this one. In the technical action, we're above that 200-day line, but not that much. We're only above it by 3.44%. Not a lot. It is a higher price stock, so I do have my stop loss set at 26.91 there. I do have it set there. And hopefully I'm going to be accumulating more of this. What my original plan was to acquire below this pivot, the pivot being on a consolidation, 3,019. So basically $3,000 below that pivot. But it looks like in after hours, in after hours trading, we're starting to see hopefully the turn here. We're up about $9 a share, not a lot, 0.33%. Remember, this is a very high price stock. So, I mean, a move of $9 a share is not a lot in this stock because of its expense. But it does appear that after hours, we're starting to head higher, which would make sense based on this news. I think that a lot of people are going to be trying to acquire this because typically, if you look back, in 2020, we had Tesla increased over 60% from the announcement of the split to when it split. And it split on August 31st. Apple up 40%. So the question is, can we get one of these really, really good rallies? And I'm kind of betting on it. I think that I think Alphabet is in a very good position with a 20-to-1 split to be one of these gainers, these big gainers this year. So that's kind of what my, that's kind of what my take is on it. So basically, if you also wanted to show everybody up here, if you want to get the ready list, it's super easy. Just go to this address, https://bit.ly, and this is kind of complicated. 3, the number 3, lowercase UGF, all lowercase, capital S, and then a lowercase o and 2. So hopefully you can see this on the screen. If you're looking on TikTok, super easy. Just go to my profile, click on the link, and we do have this available on one of the buttons you can just push, and you can get right on this list. So this is a nice little list. This is kind of what we're using to find stocks that are getting ready to make the move, and we're building our ready list because we're still, this market, even though we're in a confirmed uptrend, it is still kind of under pressure. So kind of a weird mixed bag out there. So without further ado, let's take some questions. Thanks for waiting, everybody. So appreciate it. And let's see what the comments are. Okay. All right, Ahmad, thank you. Hey, hi, Ahmad. How are you doing? Hope you're doing well. And let's see that question that you have. Great. I'm down with Microsoft and Google. 6K today. Ouch. Ooh, man. Well, I know that it's, those are both great stocks, and Microsoft, those are the two that I really like, by the way. I'm not as bullish on Facebook and some of the other big caps, but I am very bullish on Microsoft and on Google with the upcoming split. Now, what I would do, let's take a look at Microsoft, MSFT. This is a really hard market to trade, I'm telling you. I was stopped out of my position in, I was trying to initiate a position in Microsoft. I was trying to get into this position on Microsoft. I got stopped out at 300 Now it's up a little bit of that after hours, but it seems to be finding support right at that 300 line. So as painful as this is, if you're not down 7%, now if you're down 7%, I would make a different decision. But if you're not down 7%, I would hold. I would hold here. I think, I'm confident that Microsoft is going to head higher, and we're still above that 200-day line. So I wouldn't be a seller here right yet. Now we're only 2% above the 200-day moving average. I don't like to buy anything below the 200 average. I do think we're going to get some support at the 200-day line for Microsoft. This is what I was saying. This is a crazy market because you have these tremendous stocks like Microsoft, which are leaders. They're absolute long-term leaders, just absolutely no question on it, and they're weak. And why? Well, it's because of inflation. The strength right now is in the oils, and that's why basically in my little portfolio, which is very small right now, I'm mostly in cash. What I have is I have Google and 3 oil space. Well, I have 2 natural gas, 1 oil, and Google. And I'm trying to add stuff. I'm trying to get just stuff that I can add, but it's really tough in this environment. So I would be a holder of Microsoft. I wouldn't sell it here. Now, I wouldn't be a buyer at Microsoft there. I want to see a little bit more strength, but I wouldn't be a seller either. So let's look at Google, Googl. And of course, I've been buying this one. And as you can see, there it is. There's my buy point right there. And we're below that. So I'm hoping we're going to get some strength. Now, it does look like we have some good stuff going on. We have that 10-day line moving up. That is a good thing. That's this little pink line. Don't know if you can see it. What I'll do here is I will kind of show you a sort of easier way to see it with the moving averages. But that 10-day line, we're above that 10-day line, which is good. That means in the ultra short term, we are starting to see a movement up, believe it or not, in Alphabet. Because in the 10-day line, in the 10-day period, basically last week, this is the weekly period, we're up about 1.97%. So that is looking good. The 21-day, it is steady, but it's still very weak. We are below the 50-day line. Now, hopefully, we're going to see it rally, but we still haven't bottomed here. We went all the way up to the buy. We went all the way up to the buy point at 3,019, and then we were rejected. As you can see, that was the announcement right there for the split. And then it pulled down, and then it pulled up and it's pulled down. So it still hasn't bottomed. We're hoping, with this after hours action, that we're going to see a bottoming at the 21-day line. That's my guess, is where it's going to reverse higher. At least I'm hoping that. I'm hoping that's the case. Anyways, so there you go. Okay, so let's take a look at some of the people that. Oh, look at that. Chevron has a 6% dividend. It does. Hey, Jim, what do you think of MNMD? I'm not familiar with that one. Let's just take a look really quick. MNMD. Okay, great. There we go. Hopefully I didn't show. I don't know. Why is the stock market rising this year after so far? Well, part of the reason, and what goes up must come down, as they say. Part of the reason is, and this is part of the reason I'm so heavily in cash, to be honest with you. Part of the reason is that we are in a bit of a downward trend. Let's take a look at the even, and this sounds really like I'm speaking on a two-faced amount. We're in a confirmed uptrend in the short term, but we're sort of in a little bit of an adjustment period. So let's take a look at the Nasdaq. Let's look at Nasdaq NASD. Okay, get the Nasdaq up here. What I'm doing is I'm pulling up the Nasdaq. Okay, and Nasdaq Composite. That's what we want to see. Great. Okay, so this is the Nasdaq, and as you can see, notice how this is on I have a little notation on the 26th here. Notice how we basically went down and we we got a little bit of support right about 1350. We did rally all the way up to the 21-day line, but now we've pulled back down about 14,000, and we're struggling. So in the short term, in the very short term, the last month or so, we've been essentially in a downward trend until we got to the follow through day here, and so we're just slightly in this upward trend, but the trend, unfortunately, is downward right now. And the question is, where will that end? Well, let's look at the weekly chart to see. You see, we're well below that 200-day line. So we may be in a situation, we may pull further down here. We may be at a situation where there's going to be a reversal. But it has been a very tough, it's been a very tough few weeks. I mean, there's no question about it. I mean, we were doing very good. We hit our all-time high on the. We basically have been sort of in this downward trend since November 20th. We kind of hit our all-time high, 16,212 on the Nasdaq, and we've been pulling back ever since. Now, I think we did get some support. And this is what I'm hoping. This is kind of why I'm looking to come back into the market. We did get some support right at 13,000. And it does appear that we're moving higher. Now, currently on the Nasdaq, we're at 14,000. So we're basically 100 above where I think the floor is. The floor being on the Nasdaq right here. There you go. So I drew that line here. Now, why is that important, and why am I even interested in that? Well, the reason is because I do think, as you can see, this connects the dots. I do think this is a key level, 13,000. And I do think we got some support out there. Now, there's a whole lot of money sitting on the sidelines that wants to come into this market, but because of inflation and because of interest rates, it's not doing that. And that's the reason why we have to be so defensive right now. It's just, it's a tough market. I mean, we have to be so defensive in this market because of that. So just a tough way to go. Now, one stock that is doing well, thanks, Roman, very much for this. This is Roman Singh. And he's talking about Starbulk, SBLK. This is an interesting group. This is doing this group, the shippers, has been doing well. This is one of the few areas that has been doing well. I'm currently not in this one. I was in Matson Lines, which is essentially in this group, and this is a good place to look for potential. For potential. We're right at the buy point, and I'm thinking possibly about buying. Buying in the situation. The biggest issue that I have right now is we're only 9 days away from earnings. I have a feeling there's going to be very good earnings for Starbulk. If you look at the weekly chart here, we've been up more than 25% in sales the last 3 quarters, and if you look at the profits, and that's really the key. The profits, these are just blowout numbers, unbelievable numbers. Now, one of the things you have to factor into Starbulk is that this is the ultimate value stock, because look at that PE ratio, it's 6. And this company does return very large dividends. So the dividends are so large in this stock that it affects the stock price. So we really have to adjust it. But look at this. The PE ratio is 6 here. Now, normally, I am not a value investor. I am the kind of guy that looks to see, what's going on in the future. I mean, we were in, Tesla and Apple, and those have horrendous PE ratios. But right now, the market is scared, and it's looking for return. So where is the return? Well, the return is in some of the commodities, like oil, which are going crazy. Believe it or not, here in Dallas, which has some of the cheapest gas prices in the country, I think Oklahoma City is traditionally the cheapest. We are over $3 a gallon. We're at about $3.15 a gallon, which for here is a lot. Now, of course, in California, where I'm originally from, that's nothing. That's nothing. But there's a lot of inflation, and so the money is looking for return. It's looking not for return in 6 months, 6 years, or 60 years. It's looking for return like next quarter. So that's why the emphasis on the cash flow, the emphasis on the PE ratios. And I'm going to probably do a study of what are the best PE stocks, because I think that, I don't normally do this, but this is the kind of thing that we're starting to see. But Starbulk is good. And is it viable at this level? Well, let's look at the technicals. We are basically right at the, we're 5% above the 3-day, the 3-week line. That's a good place to buy it. As long as you can buy it within about 5% of that, that's not a bad place. I'm going to go to the daily chart to see if we can find a better entry. But yeah, we have this, it's on this consolidation base, stage 2, consolidation base, and the pivot, the buy point, 2161. We're basically, 2461. We're basically 2465. So we're right in the buy zone right now. So if you want to buy something, and you want to buy something now. Now I'm not necessarily buying this because we're too close to earnings, but I have to say, this is one that you want to look at. So this is viable. Starbulk, SBLK, is viable right now. So this is something. This is a buy. You can buy this right now. And I'm not, I can't guarantee it's gonna zoom to the moon, but it looks good. It's coming out of this consolidation. It's got strong profits. Its relative strength is 98. That means it's in the top 2%. So Starbucks it's checking all the boxes. It's got a 100% checklist, by the way. This is also something that I look at very, very heavily. So this is looking good too. The industry group is number 9 out of 197. So that's excellent too. So this one you might want to put down in your blotter. SBLK Starbulk. It's at a buy point right now, and it's viable. I mean, if you're looking for something, if you're looking to put some money to work in this market, again, I'm mostly in cash right now, but if you're looking to put some money to work, this is one you could do it with. Starbulk. All right, let's look at Coinbase and Nvidia. Let's look at Coinbase first. We started to see a little bit of movement on Bitcoin finally, but I just think that this one, it's still too early. We are below that 200-day line, so I am not currently. I am not looking to see. I'm not looking at this one very hard. We're above the 10-day line. We're above the 21-day line, but we're way below the 200-day line. Just FYI, you don't ever want to buy anything below that little black line, and that's below the 200 days. So this is an absolute no-go, and I just wouldn't be a buyer on this one. I think it's extremely dangerous. So Coin is a no buy. So just don't buy this one. It's in a downward trend, and you just don't want to buy it. I'm not saying this is forever. But boy, you don't want to buy this one. This is in a downward trend. It's got a bad chart, and it's below the 200-day line. So we almost have a trifecta of badness. So we don't want to buy that one. Now the question is, what is the situation for Nvidia? Nvidia is a very different animal. Nvidia is one of the top stocks that is being acquired by funds. Now, it hasn't had a very good last few month or two. I mean, but I do think it has turned the corner. I did enter a bull put spread on it, hoping that it could go higher, and it definitely has. I mean, it hasn't performed as well as I would have liked, but it is above that reversal line, and that's very key. So, not the best group right now. This has been falling. The semiconductor fab was 50 out of 197, but not terrible. But this group has been falling. But Nvidia is one of the top stocks that is being accumulated by funds. So where are we at? Well, let's look at the technicals. We're 9% above the 200-day line. That's decent. We don't want to buy anything that has a negative on the 200-day line. Just don't want to do that. We are below the 50-day line. We're below the 10-day line. So we've been falling. What this tells us is that in the intermediate term, this stock has been falling, but we're starting to make a stand here because we're 4% above the 10-day line. So in the last week, this has been rallying. And the question is, can you get in here? Well, I wouldn't probably, if I wouldn't do a new buy here because we're only 9 days in front of earnings. So that is something I would be very concerned about. But this is definitely one you want to put on the watch list. I want to see a little bit more strength before I would buy back into Nvidia, but I do like the stock in general. So here's the thing. I think you got a watch list, watch and wait for Nvidia. I just don't really think it's a buy at this moment. It's a great stock, but we've got earnings in 9 days, and I just think it's a little bit tough to buy it right now. All right, let's take another question. Thank you very much. Okay, Facebook. Oh boy, Facebook. My cost is 212. Should I sell or keep? Boy, I think this one you got to sell it, unfortunately. And I don't like to. Your cost is 212. Yeah, and we're way down here, so that's not bad. I mean, yeah, you know what? That's not bad. That's not bad. But I'm seeing some red here. I'd sell. I'm sorry to be so negative here, but I think you need to sell. I think you need to sell. Sell. Take your profits. Sell. Take profits. Take profits. I think you got to take your profits. I think the storm clouds are going to get worse for Facebook before they get better. This is when you have drops like this. This is significant. Now, another stock that's kind of in this same category that I want to take a look at is Netflix. I do have an iron condor on it. I have been, this one I expect it to move a little bit lower. NFLX. I had to adjust this iron condor. Let's see how it's doing after hours. Up a little bit after hours. It was down almost 2% today. Just look like it's getting a little bit of a bounce here, but I do think this one is trending lower. This is one of the reasons why when you get these gap downs like this, you really have to sell them. So I would, on Facebook, I think it's time probably to look at possibly cashing in some of your chips. I mean, if you're in at 212, that's very good, and so I would sell and take profits. That's what I would do. That's what I would do. Absolutely. But good. All right. Jim, thanks for teaching about the stop loss. Oh, right on. Good for you. Yay. Yay, team. By the way, everybody, I talk a lot about stop losses. I know that, it's crazy, but I always put stop losses on everything. Now, I have a little cheat sheet. I typically use the index lenses, but you can do exactly this. When you buy a stock, when you buy a stock, always remember to put a stop loss 7% below where you bought it. Now, I know that sounds very arbitrary. Why would you do that? Well, the reason that you do that is because if you're buying correctly and you're sizing correctly, that is going to keep your capital. So never let a stock move against you more than 7% from your buy price. It's better to sell it, wait for it to settle, and then buy it back. Remember, you can always sell and buy it back. You can always do that. But when you lose the capital, that's what you want to avoid. So 7% down, that's where you want to put your stop loss. I happen to use market stop losses. I think they're the best because in a volatile market, you might get stopped out and you say, darn, I got stopped out. But then the stock will many times fall and you'll be, wow, I'm glad it was stopped out. So stopping out is not a bad thing. Nvidia, let's look at that again. This is really one of my favorite stocks. This is also part of the reason I'm so high on these stock splits is because this stock also was a 4-to-1 stock split as well. So anytime that you get an opportunity with a stock that's splitting, that's something you want to look into. And this was basically for this last year. Now, it does look like Nvidia is continuing. It's strong up in the after hours. It does look like we've reversed on Nvidia. And I think that if you did buy it here, I would probably put my stop loss at the 200-day line. Now, where is that 200-day line? Well, it's a little bit low. It's 9% below. So maybe if we did this, we could put, if we bought here, we probably want to, boy, it's tough. I would put my stop loss probably right about at about 230. That's where I would put it. That would put us down about 7%. So I do think that we're going to see this one probably reverse higher this week. That's what I'm looking at. I mean, there's a lot of people that are buying it. The price isn't moving very much, but we're still below the 21-day line. So if we get above that in the 21-day line, we're pretty close to the 21-day line. We're 1% below it. Once we get above that and we hold that 21-day line for Nvidia, I think it's probably going higher because this is a premier stock and doing very, very well. Also, another stock that I want to bring your attention to, I was reviewing the list of the most bought stocks by mutual funds, and MU, one of my favorite stocks, appeared on this list. Now, I don't own an MU right now, and I don't think I would buy it at this level because it's been adjusting. And as you can see, it's having a little bit of difficulty with the 200-day line. But I think that once we get hopefully back into a more sane market, this will start moving higher. I don't have any. I don't own this one right now, and buying stuff off the 200-day line. Wow, I mean, you got to be brave to do that. But it's 1% above. I wouldn't buy it at this level, but it has a very good checklist, and I know that there's a lot of money that's flowing into this issue. So, but I probably wouldn't be a buyer. I just wanted to kind of put it out there. One of the things you got to look for in a really good growth stock. Now, we're not in a period of time in which the growth stocks are great, but one of the things about this stock, this is considered a growth stock, is look at this PE ratio. It's 11, and this is a semiconductor company. Can you believe that? $11 cash flow on this issue. So that's really, really spectacular when you think about it, because it's a semiconductor company. Also, you'll notice the sales have been going up. Any stock that can go up, that can have sales that increase 20% every quarter after quarter, and it's done for 1, 2, 3, 4 quarters, is something you want to look at. Let's see. The earnings are basically on the 31st of March, so we got a little bit of time there. It does look, their earnings that they came through, they were very, very strong. So, anyways, I think this should be on the watch list. I would buy it at this level, but definitely on a watch list. So great. Okay, let's look at CrowdStrike. Can we do anything with CrowdStrike? CRWD. Let's see. CRWD. Let's see if we can. CrowdStrike Holdings. Boy, unfortunate. I wish I had better news here. This has been a problem with a lot of the stocks. Okay, you definitely don't want to buy this one until it moves above the 200-day line. Let me show you why. If you can see that the 50-day line, actually this is the 10-week line and the 40-week line, because it's the weekly chart. It's fallen below that 200-day line. That's called the death cross. So this is showing weakness. So this may be, actually, believe it or not, this may be a potential short. Can you believe that? I can hardly believe that this would be a short. Look at these numbers. These are stellar numbers in sales, but I am showing a lot of weakness here. This is a weak chart, unfortunately. On the technicals, we've had a movement up in the last 3 weeks of 2%, but we are way below the 40-week line. So the trend of this is downwards. I mean, I hate to tell you. Here's what I would do. If I was more than 7% down this one, I'd sell it and wait for a better opportunity, because this is not the kind of chart you want to see. This is just not the kind of chart you want to see. We're below that 200-day line. We've got the 50-day crossing below it. It looks as if, and even though this is a good company, it just doesn't look good. The checklist is weak relatively for this area. One of the problems is that we have the computer security software area has been falling a little bit. This is a tough area. And I think right now you just gotta, if you're down more than 7% on this one, I think you gotta sell it. I really do, because it just doesn't look good to me. All right, let's see. Let's look at. Well, thank you very much for lead sheet one. Appreciate it. Let's see. Let's look at Chevron CVN. Of course, this is one of the integrated. Now, the list that I showed you at the beginning of the show, this is the E&Ps. These are the drillers. Chevron does not go in this category. CVX is one of the large integrateds. There's Exxon. And this area has been very strong. This is a dividend play. This is not really a very exciting stock, but as a matter of fact, this is the first stock that I ever owned. It actually merged with this company called Texaco, but this was Texaco, and it was Chevron, and then Chevron, Texaco, and then Chevron. But this is the first stock I actually ever owned, believe it or not, was in this area. And believe me, I had it for years, and it always paid a good dividend. So that definitely is true. This has got a PE of 16, but this is actually it doesn't qualify as a dividend aristocrat because of the one period. So it's a long story about Texaco, but very strong in terms of the dividend. That is absolutely true. The return on equity, 12%. That's really good. Cash flow, look at that. The 16. Oops. Let's see if I can go back to CVN here. CVX actually, which is Chevron. As you can see, just very strong growth in terms of sales. Very good. And look at those numbers. The profit numbers are good. See, the oil is where it's at, really. I mean, it's one of the few areas. The integrateds, the oil and gas integrateds, this is 5 out of 197. So there's definitely a lot of capital moving into this area. Let's see if we can get that. Let's see if I can bring up the oil and gas integrated. Let's see, because this is an interesting area I haven't really been as active in. This is number 5. This is right below E&P, but this is the integrated company. These are the monster companies. These are the really big ones. The Exxon Mobils of the world. These are those kind of stocks. So let's look at the top stocks. Williams, okay, I have Williams. Gazprom, of course, is a Soviet company. I say Soviet, Russian. Total, that's French. Shell, and we've got Chevron, Shell, BP, Exxon, the normal suspects. Let's see if any of these are viable. Let's take a look. I'm very high in Williams right now. This is one area that I've been. It's a smaller company based in, I think, Tulsa, Oklahoma. But in Tulsa. Just been a fabulous company. This is an integrated, off a little bit in after hours. This is a $30 stock, which has a 100% checklist, I believe. Yep, it is 100% checklist currently. This is one of the ones I do own, and I think it looks good technically. It's above the 40, the 10, and the 3 week. This is when it's weekly. That's why these are in weeks, not in days. So again, looking very good. Sales are up every quarter, which is what you want to see. I'd like to see a little bit stronger profit growth, but it's looking very good. 48% funds in this one. Strong cash flow considering the price. It's a $30 stock, and yet it has $2.56 cash flow, which is good. A little bit higher PE, 24 on that, but return on the equity quite good at 11. So this is another one you might want to look at if you're looking for something to move into. It's really, I think it's a little extended. Let's see. I think it may be at a buy point. Yeah, it's just slightly extended, not very much, but I think it's going to continue to move up. I probably will be adding to this position. See, I bought on the 31st a full position at 30. So not really, basically right above that pivot, and it's kind of inching its way up. I think this is going to do quite well. So instead of buying CrowdStrike, you might want to look at Williams Companies, WMB, even though it's in a different area. All right, let's for Trey. Shorting TMS. Good question. I like the cut of your jib there. As you know, I kind of like shorting stuff. TMS, and we did pretty good. I hope that, I try to signal this. I had a short on Peloton, and I did close that early for a profit, and it sort of had a dead cat bounce. So I hope that you weren't in for the dead cat bounce. I'm trying to get better on figuring out a way to indicate to everybody out there when I'm closing my short positions. But let's look at TMS, and I do have a few right now out there, and then we can kind of look and see how they're doing. Shorting TRNS. I'm sorry, TRNS. Let's take a look. Oh, Transcat distributes test and measurement. Yeah, I don't know. This is a weird one. Typically, the best shorts, Troy, are stocks that have run up big in the past, and for whatever reason, are not doing quite as well. And I do have a kind of a short on Zoom Media. I don't know how well that's doing. We're up a little bit in the after hours, so I'm on the right trend, but we'll see if that's right or wrong. So we want, when you're looking for a short, you want to see a big winner in the past that is sort of, at a point where it's probably not going to do as well. I kind of want to look at Facebook for this. Let's see, FB. Let's see if this is shortable. This might be highly dangerous to do this, but the question is Facebook shortable? And it might be. There's a lot of people that are heavily invested in it, and I think it could go at least as low as this consolidation here at 224 right now. Yeah, and we're right. Yeah, okay, we're right at 224. Okay, that makes sense. So the question is, if it can hold, let's see what happens. But I think this may be going lower. I think Facebook may actually be going lower, and I think there's going to be a lot of people that are going to try to hype it, and they may want to get out the back door. Now, the part of the reason I'm told Meta is having so much trouble is because of TikTok. So who knows? Actually, Troy, technically we're not. We're actually not in a bear market. We haven't been in a bear market. You would think that we were in a bear market. We're not in a bear market. We're in a confirmed uptrend, but it's a very, very weak. The fall through days were not on the Nasdaq. They were on the Dow, and that's a really bad place to have the fall through days. So even though we're technically not in a bear market, we sort of are in a bear market. Oh, by the way, here is a stock that I want to kind of look at. It's Workday, WDAY, and this is one I do have a short on. I don't know if and it's off after hours. Yeah, this one's starting to break down. I think this one might do pretty well on this one. Let's take a look. 236 is the price. I just want to kind of check in and see what the situation is on the short that we have on that one that we were putting out there for everyone. Let's see if I can. Oops. Let's see if I can make it work. All right. What I'm doing is I'm gonna go ahead and take a look to see if I can find this. And this is one for Workday. I want to kind of do a check on it. WDAY, of course, is the price. I mean, is the symbol. This is a bear put spread that we put out there on January 3rd, and I kind of want to take a look at it. This is a bear spread we put out on January 3rd. Now, it is currently 236 is the current price. So let's take a look here. Let me just go get the price. Let me just go get the price for Workday, the closing prices on that, so we can do that. Everyday price. Yeah. Okay. So basically, the price on this 236.45. So here's what I'm doing basically is I'm just going back here, and I am just inserting the new price to see kind of where we're at on this spread. This is a bear spread, and if you're listening to any amount of time, you know that I like to do these in this kind of market because There are companies that, will be, experiencing a lot of pain. And yep, there we go. And so this is the current price that we have on workday, 236.45. So let's take a look. This is going to be the 7th. So let's go 236. So we move this a little down here. So this is not bad. This one looks like we started up here on the 3rd at 242. We're now at 236. As you can see, we're moving very nicely here. This is a bear put spread. Here's how we entered it. We basically went in and we got a $607 credit by doing one contract, selling the March 18th 230 put, and then buying simultaneously the March 18th 240. So the spread of 10. There's a maximum risk on this of $393. So it's a 2-for-1. I do like the 2-for-1s better than the the 1-for-1. So I try to get a fairly high ratio of of gain. So this one's doing fairly well. It's work day and it does look like it's going down. So hopefully we will do well on this one. All right. Let's take this one. Thank you so much. Let's look at Square. And of course, a lot of people were in Square. So let me get back to the charts here. Okay, there we go. And look at Square SQ. And there we go. Okay, so this is Square. Boy, this is not looking good. This looks like possibly a decent short, actually. We have earnings in 17 days. That could be a deciding factor here. Let's take a look. If I was in this one look at that. Wow, we definitely have a. Okay, so I did do a credit spread. I did one short here. I shorted from here to here. The question is, can I come back in and short? Here's what you want to have happen. The ideal time to short obviously was there. Okay, was there, and that was like 1, 2, 3, 4 days ago. So let's see exactly when that was. That was the ideal time to short, and that was on the 1st of February. What you want to do when you're shorting, when you have a downward trend like this, you want, when it rallies to that 21-day line, that's where you want to short it. So the question is, I would short this one if we saw it rally again, but right now I wouldn't. But if you're down more than 7% on this and you're long on this, I would close the position. My thoughts on this, it's going lower. That's my thoughts on it. On the technicals, we're 53% below the 200-day line. Obviously, when you're going long, you never want to buy anything, below the 200-day line. I kind of want to show you on this chart why this is such a good short candidate. We have that death cross, the 40-day falling below the 200-day, so that shows weakness. And then we have this rallying up to the 10-day line. You'll notice that every time it rallies to the 10-day line, it fails, and then it fails, and it fails, and it fails. So it's probably going to go lower. Wouldn't short it here because we want to wait for it to come up possibly to the 10 or possibly the 21-day line and fail lower. But I don't. I hope you're not long on this one because it is looking mighty weak, mighty weak. Okay, we've got a few others here. Okay. Question. Look at EF. It's an oil and gas explosive company and a penny stock. I could definitely take a look, but there's some other ones that I kind of want to talk to first. Any spread trades today? I've been working on this. I haven't found any yet, but then again, I have been working as hard as I need to work. So let's look at NVAX. NVAX. Let's see if there's anything there. Wow. Okay. This has got some pretty awful charting. Could we make money on this as a short? I'm not a real expert in the biotech area, I'll be honest with you, but I do like the fact that this is absolutely at the bottom of the barrel. 165 out of 197. So that's it's got a relative strength of 9. So that's horrible. Also, we've got this death cross going on here. I like that because that's showing lots of weakness. we have this thing where it's rallying. Wow, this is not a bad place to short it because it's rallied to the 21-day line. This thing is going south. So I'm going to put NVAX on my list. NVAX of a short. All right. Well, thank you for bringing that to my attention because this is looking mighty weak. Develops vaccines that improve therapy options for avian influenza and other infectious diseases. Okay, well, it's got 29% funds. It's got no. Yeah, this is looking like it's weak. It's got 33 checklists. That's bad. Look at that. It has been rallying in the last 10 days. When this shows weakness, that's where you short it. Because right now, it's rallying up, and it does look like it closed. Let's see. I'm just looking at the 60-minute chart to see. Yeah, it does kind of look like it's getting some rejection here. But who knows? I mean, that's a tough one. I want to put together a bear call on that one. I don't know if a bear put would work on this one. I want to look at make sure that there's enough volume. Well, it's got enough volume, and it is up a little bit after hours. So the question is, will it rally and then collapse? I think that's likely. So that could be a very good short. I'm gonna look into that as a potential for a short. DocuSign. DocuSign might be actually even a better short because that was such a popular stock. And boy, look at that. Oh yeah. DocuSign is this is a better short because there's an awful lot of people in it. The reason that these are such good shorts is because when a stock is like this is really popular, they have lots and lots of funds in it, and they have to find a way to get out the back door of the burning house. And that's definitely the case here with DocuSign. We have a very weak stock that is trending lower after this gap down. Gap down there. So that is looking pretty weak, actually, pretty weak. So this is potentially a short because we have a topping action here. It was expensive stock. And it's coming down, and it's looking like it just has gone up to that. It's trying to make it up to the 21-day line. It doesn't have enough power. At 8 is the relative strength. Let's look at the checklist. 67 is a pretty good checklist, though. That's the issue. It's still okay. So it still has a pretty good checklist. That is a little bit concerning for a short. But we're very far below the pivot. We're almost 150 days below the last time it had a pivot, which was at 290. So it's given up a lot. It's given up a lot here. It's almost gone down 50%. You see, when they go down 50%, they're going down another 50%. It's not that unusual. So it looks as if with DocuSign, we have a stock that is very weak. It's below that 200-day line. It has the death cross. Boy, it's got everything here. So I may be doing a short on this one as opposed to NVAX. NVAX is a little bit thin for me. I like DocuSign because it's bigger, and it looks like it may go even further south, and this would be a good place to possibly pick up some money on it. So very interesting. Thank you, Corin. Appreciate it. Okay. Iron Condor. How is your Iron Condor on Netflix? I wish it were better, but let's take a look at the Iron Condor. I did do the calculation on it, so let's take a look at Netflix. NFLX. I had to do an adjustment. It looks like it's a little bit of bounce in the after hours. Currently, it's at 402.80. Let's see if I can let's see if I can find something for that, so I can give you an update on that one. So let's do that. See how that is doing. Okay, let's go here and let's see if I can. Okay. What I'm doing is I'm going here to my slides where I have the calculation for this Iron Condor NFLX. All right, and this is the Iron Condor, and I did adjust this one. So it was higher. We did adjust it down, and it has been somewhat it's somewhat difficult. This has not gone as well as I'd like to have had it. Now, when I last looked at this, we opened this on February 17th. Currently, we've got to look here, and it looks as if we are not doing as well as we would have liked to see. So this is the adjusted one, and let me get that. Make sure that I can get that here. So let's get that price for you. All right. Let's go to the prices. There we go. And this is probably the last question for the day. So we're at 402. So we definitely moved up here a little bit. 402. This is not what I'm liking to see. So it looks as if we're still kind of underwater, but we're making our way. So if we can get a little bit of a drop on this, we'll end up with the $975. So that's where I'm at right now in terms of my trade. Let's move it up. It's a little bit, yeah. So I'm not looking as good as I'd like to on this. Will I adjust it? Maybe. I'm gonna wait and give it a little bit more time, and then if not, I will have to adjust this one. But as you can see, we're sort of just in the pink here, so hopefully we get it and it moves lower. That's kind of what has to happen for it to work there. So let's look at the chart and see if that is going to be indeed the case. I think we are going lower on Netflix. I do believe we are, but who knows? I mean, at least on the weekly chart, it seems to be that way. So I am kind of bearish on Netflix right now, but I have been kind of fooled on this one. We were down almost 2% today, and then we bounced a little bit. I still think that hopefully that we're going to move a little bit lower on this one, but I am seeing some buying activity. So the question is, can we get a floor here at 400? Maybe. This has a relative strength of 20, and it did drop like this. So I do think that over a period of time, and it does have the death cross. So over the period of time, I think that this is probably going to go lower. That's my guess. If not, I'm going to have to readjust, but that is the condition of that contour. All right. Well, I've got a whole hour here, and I so appreciate everybody dropping in for the show. If you want to get on the action trailer, it's super duper easy to do. Just go to www.Dallas Trading Floor, and of course, first and last name, and we'll get you right on that. I think we're going to be putting out I don't know, I'm working on some other stuff. Hopefully, I'm going to be putting out some stuff tonight, and we'll get it out to everybody. If you're looking on the TikTok, super easy to do to get on the DAX trailers. All you have to do is go to my profile, click on the link, and first and last name, and you'll be able to get on that. So I will be back tomorrow at 4:30. I hope everybody is doing well and warming up here a little bit. We definitely are here in Dallas. Didn't get to quite everyone, try to get to everyone, but thanks for all your questions, and we will be seeing you tomorrow at about 4:30. Happy trading, everybody.